Put your hands together in a burst of energy and welcome Sunil and the panelists onto our stage. Thank you very much.
Morning, everybody.
Can you mic him up?
So we have an additional panelist. You may know some of her, Ridhi, because we have one presentation. But Ridhi, we got on the stage as well. She has no clue that she's coming on the stage, by the way. But she writes half my questions, and I thought she might know some answers as well. So yeah, please come. So this session is going to be around the impact of what's going on in the USA, the impact on India, looking at the stock market. So 4 themes that we'll cover, essentially. So I'm going to be looking for questions on these 4 themes. So I'll let you know what they are now, so you can be thinking about questions. And I don't mind questions as they come along. So theme number 1 is going to be around impact of Trump's policies or not on the Indian stock market and what's going on over here. The second theme is going to be around tariffs between India, US, and other countries, and impact. And we'll be looking at biotech, pharma, and other sectors as well. Third theme is going to be around economics versus sustainability. We all know what Trump is doing. Might be good for economics, might not be. What other impact is that going to have? And fourthly, it's going to be around the geopoliticals, just to see, because this is having an impact on other areas, other countries, and it could have an impact on India, China, etc. as well. Everyone's rearming. So they're the 4 themes. Think about questions. Theme number 1, stock market. Theme number 2, trade and tariffs. Theme number 3, sustainability. And theme number 4 is around geopolitics and all the wars that are going on in the world and that impact. So think about some questions. And you guys, that's probably completely different to what actually...
President, you are meeting Prime Minister Modi of India this afternoon. What kind of trade and tariff relations would you like to have with India, and what's the vision for India?
India traditionally is the highest, just about the highest tariffed country. They charge more tariffs than any other country. And, I mean, we'll be talking about that. But, again, whatever they charge us, we're charging them. So it works out very well. It's a beautiful, simple system. And we don't have to worry about, we're charging too much or too little. But traditionally, India is right at the top of the pack, pretty much. There are a couple of smaller countries that are actually more. But India is they charge tremendous tariffs.
Obesity is one of the...
I'm trying to say I'm a bit obese. Is that like a subtle message? No. So, first question for you guys. Who actually monitors what's going on in the Indian stock market? Who has like their funds, what's going on, who's looking at what's going on in the world in the stock market, and how does you think it affects you? Hands up if you know about the stock market and what's going on, and how it's affecting your mutual funds. Not so many. But okay, look, it's having an impact in your retirement, in your pension. It's going to have an impact on many things that you do. And a lot of the policies which Trump are putting in place is having an impact. So that's going to be with the first question. So I'm going to ask the panelists first to introduce themselves, and secondly give their opinion on what's going on in the market and the impact of Trump. So just like just generally what their thought is on that sort of area first. So Kavita, maybe introduce yourself first, and then just come with that question. So I'd like to get into the questions as quickly as possible.
Hello everyone, can you hear me well? Great to be in this crowd of 25-year-olds, great energy. And I've had a warning given to Sunil that I've had an allergy bout this morning, so let's pray that I don't sneeze into the mic.
I told her, as soon as she's about to sneeze, I'll ask her a question.
So I'm Kavita Jadeja. I'm part of Iroller Capital, which is a family office, and it started out as an angel investing unit that my cousin Milap leads, and I've joined him recently. I'm a career sustainability professional, which is why I think Sunil has brought in the sustainability theme into it. And I think if I were to look at the market recalibration from a sustainability perspective, what has also happened besides the stock market sort of getting a correction is that the idea of sustainability is getting recalibrated as we move along. This has been happening since probably or in the making since 2021, which is post-COVID. I would not want to pin it only on Trump, for that matter, which is a combination of economics at core. I think what has happened since post-2021 is that we've had several variables coming into the market, geopolitical tensions, stress on the healthcare economy. And I think at the core of it is an economic question, which is how do you allocate limited resources to unlimited human wants? And I think that has prompted everyone, including Trump, to relook at how ESG or sustainability has been used over the last decade, which has been more of a virtue signaling. So I do take a look at this, this phenomena as an opportunity to probably for the market to do better than looking at sustainability as virtue signaling and probably moving to real life solutions and contribution to the economy.
Thanks. Kavita has a very unique background that she's been in private equity and investment, as well as having great knowledge around sustainability. So she can come in at sort of both perspectives, which can be quite important. So, Anar?
Hi, everyone. I'm Anar Thakershy, chartered accountant by education, and slowly shifted to entrepreneurship, and love reading about economics and things developing. And yes, I do invest in the stock market. Lost quite a bit in the few months. So we'll talk of the current topic. Yesterday I was listening to Trump's address to the Congress, which was a good 2 hour. And he is a king setting the goals of a true leader, leading from the front. He is obviously thinking only about his country. US is in a debt situation. Income is less than expenses. They pay 18% interest on the borrowings. So his only job in the next few years is going to be how to increase the surplus. And that is why one of the reasons he has introduced the tariff, how to bring back more to the country. And that has led to the fall in the stock exchange. Like India has lost almost 15 to 20% of the market starting from September till date, but domestic front is good. So I think everybody here should invest in stock market. It's a good point to get in.
Yeah, I mean,
let Sunil take it forward now, please.
Thank you.
Yeah.
Hey, good morning, everybody. My name is Arjit. I lead something called Mars Short Ventures. This is an investment vehicle set up by the founders of Razorpay as a means to give back to the ecosystem. So Razorpay is one of India's leading fintech companies. Been there for around 10 years. And what we like to do is work with early stage entrepreneurs and help them with all the learnings that our founders have had over the last 10 years so that their journey to success is a lot more optimal to build the next wave of startups. Commenting on what's happening in the Indian stock market, I think there are two factors. Of course, whenever there is US election and new president being elected, markets start getting choppy. But also there's a double whammy because we have a little bit decline on consumption on the domestic front. We have some FIIs also withdrawing their capital. Market was on its potential peak at a couple of months back. So it's a cycle, it goes up, it comes down. And like my co-panelists were saying that, you're always trying to find the bottom and, buy the dip. So maybe we're somewhere there, market only recovers from here. So, listen to experts who understand the market better. I'm not the expert, though I do a lot of investing personally, but I can't give it to you as, personal advice to invest in the public markets. Private markets, I can answer any questions that you have. But yeah, I think if you don't know how to go about it, and if you feel that you're losing money, switch to things like mutual funds and financial advisors. Yeah.
Thanks, Umesh.
Hello. Yeah, good morning, everyone. Good morning. I think this is the burning topic, most burning topic. All whosoever is associated with the financial market, even I think general public is also very much involved. What Trump is saying in the morning, he's saying something, evening he's saying something. So he's very unpredictable. So I think you've chosen the very right topic, even though we are not the experts into
we'll be experts by the end of this. We'll all be experts. No. We're learning together. Who knows what Trump's going to do? We wake up in the morning thinking, what's the headline?
Because now every day there's a debate, lot of debate on all channels about the Trump only. So I think all of have become expert of what Trump is going to do or what is the effect on the stock markets. But specifically to the topic of stock market, I think it is related to Trump as well as certain other factors. So it was, I think, still last year itself, stock market, I think, were going down since October. There are a lot of factors like interest rate. It's all related to the global factors. I think it is related to the Dow Jones and the interest rate scenario in the US. Since we were expecting that interest rate would go down and the money will again keep chasing US because a lot of money is now going out of countries like India, emerging markets. It's chasing US because the rate of interest is quite high. So I think it's one factor is the rate of interest. Second is the US economy, how the US economy is going to perform. And that because of the Trump, that scenario itself will change. So it's very lot of uncertainty is there, how the dollar is going to behave, how the economy, US economy is going to behave. And similarly, it will have impact on the Indian market. So Indian market is having the double impact of the uncertainty around the trading, around the tariffs, and the performance of Indian companies, Indian economy. Indian economy right now, it's not doing too well. So we cannot blame it totally on the Trump. It is, I think, our internal factors, high rate of interest, our internal, I think, macro factors. They're also to be blamed for the downtrend in the Indian market. And Trump factor also is, I think, is added to the uncertainty. So it is.
Good answer, Mal. I'm going to come back to you in a few of those in a bit.
Sure. Yeah.
So Riddhi, probably she doesn't need that much introduction, but Riddhi, she obviously manages the operations for O2H Ventures. Riddhi?
Hi everyone, I think most of you might already know me, but for those who don't, I have been with O2H Ventures since almost its inception, and I'm not as experienced as much as my fellow panelists, but I would like to put a very fresh perspective on the table from someone who's learning constantly about economics, market dynamics, and how it's going to play out. When Indian government, the recent central government was re-elected, everybody in India thought stock market's gonna shoot up because we have been the fastest growing economy, right? But that didn't happen suddenly because a lot of external things affected, like Trump getting elected in the US and FI withdrawing their investments. You need to think about why it's happening. The reason is, it could be because Trump government is anti-China maybe, and it's supporting India, but it doesn't want to completely support India and make the same mistake they did with China. And that could be one of the reasons that have kind of got us to the correction. Also, if you look at the stock market patterns that we are talking about recently, it's currently like a huge talk of the town that India has been experiencing a lot of flushes in its investment, a lot of washouts and wipeouts for investors. The reason for that could be overvalued points, because we were definitely overvalued from the point where GDP growth is going and where inflation is going right now. So that could be one of the reasons I think that might affect.
Good answer. And look, in the morning, I just thought, when I came to India 4 or 5 days ago, I didn't even know that everyone was worried about stock market, apart from what Riddhi tells me in the morning. She's like, do you know this happened? Then this morning I looked at actually what are the actual numbers? And the actual numbers are, I mean, so some of the smaller caps are down around 20%. So that's kind of not dissimilar to what's going on in UK, US, that kind of thing, up and down, that kind, especially the smaller caps, they fluctuate quite a lot. The mid cap is around 18%. So again, it's quite similar to the small caps, but those smaller companies do fluctuate if they're below a certain market cap. But the Bombay Stock Exchange, the main market, is only down 12%. I mean, I say only, but it's not like a 40% decline or a 30% decline or what we saw in China the last number of years. I wouldn't even flinch in the UK if the market was down 10% over 5 or 6 months. That kind of just sort of happens. We were in a bull run, and now we're in a bear run. And so I don't think it's actually that big a deal, to be honest. And I invest quite a lot, and that's my personal opinion. And I would just say to the younger generation who haven't seen a correction, do not hit the panic button is the first thing. So if you're looking at your stock, and a lot of the people I know in O2H do invest, don't hit the panic button. That's like the biggest mistake you can make. And this is going to go up and down. India hasn't really been through a bear run for a number of years, so most of you have probably never seen this, but this kind of fluctuations happen. I think Indian economy is in a really super good position. And it may go down further, But if you have to look at, we're not professional investors. We're looking over, you have to look long term, over a 5-year, 10-year period. And over that period of time, it's a very, very, very likely chance we're going to be a lot higher than we are today. So just switch your screens off and don't panic. And if you think it's going to go down further, maybe sell a bit. So that's the kind of thinking you should be telling yourself. Maybe, but don't hit the panic buttons and just go red, because probably next week you never know, the whole thing shoots up and you missed it all. So you've got to sort of balance it out a little bit. So that's one of the sort of advice I want to give. And I don't think, I'm going to question here, I don't think it's actually not that much to do with Trump, the stock market. I think we're quite protected from Trump's policies, actually, in India. The more I look at India, Modi's actually, I think, done sort of quite a good middle road. He's been friends with Trump, he's been there, it's well received. We'll talk about the trade deficit in the next question. But I mean, my question to the panelists is really, how much of this is actually to do with Trump and just normal market stuff that happens generally because the valuations are actually quite high? The multiples, Prashant has quoted me that the multiples of Saya through the roof, but the Indian market is very, very high. It's very high right now, multiple-wise. Is it just a little bit of a correction that people are taking a bit off the table? Is that all it is, or is there something more sinister at work? So maybe we can go to Kamal first, because you were sort of alluding to sort of coming to that point, and yeah, so what are your thoughts on, is this to do with Trump or not? Or really has a...
I think you mentioned it correctly. It's more of a correction as of now, because considering this a bold statement, I would say we are kind of a threat to a lot of developed economies already in terms of what India has been doing with its government by its side. And I think, of course, it's a cyclic correction and it's going to go up from here. But I don't think that's going to come like in the short term, in the near term. It's going to take a little bit of time before we build up again and justify why we should be valued at that point. Yeah.
Kamal?
I think there's no simplified answers. There are many factors behind the crash of Indian market. Maybe overvaluation is one.
Would you call it a crash? I mean,
yeah, it's a kind of mini crash.
It's a correction,
it's
a
crash.
Kind of
mini crash.
Mini crash, okay.
Yeah, it's a mini crash, I think. It's not close to recession, but it's quite close to a bear market. Because
bear
the
market,
kind of
yeah,
correction, 15-20% is, and if you
the
see
Indian market's gone up, it's just like accelerated the last
if you see
years.
individual stocks, they might be down around 40-50%. So they are close to their COVID level, pre-COVID level. So that way, I think market correction is quite high, even though index doesn't show that much correction. But as I mentioned, there are multiple factors. FI is pulling money is one factor because US market has become more attractive, or they see overvaluation. And then there is a competition among China. So 1 year back, even China was not attractive. Now a lot of money is being pulled from India and being put into China.
Yeah.
So there are these factors. Secondly, Indian economy itself is doing not well. So growth has deaccelerated. Performance of the companies, we were expecting very high growth rate to continue, but it is not up to the mark.
Expectations are higher than the actual
expectations are quite high.
Catching up.
And then retail money, as some of our panelists mentioned, after COVID, so a lot of young people, your young generation has just put in money without looking at the fundamentals. Stocks were running at the PE of 200, 100 plus was the normal PE. So nobody was looking at the valuation. It was just you can say it's a question of sentiment also. Market is also driven by sentiment. Now there is a
lot of
there are two factors, fear and greed. So earlier the greed was the prominent factor, now the fear is the prominent factor.
So one of my good friends who's a trader tells me when the taxi driver is telling you to buy a stock, it's time to sell the market, which is what was happening in India over the last few years. But yeah.
These are cycles, I think. These are cycles where every market moves in the beer and...
How much of it do you think, I mean, I've read that there's some structural changes in India around capital gains tax, and a lot of the money's flowing out of India because people are worried about two factors. Obviously, there's performance and higher valuations. I think that's one factor. Second is, I think they're charging capital gains tax around 20% for foreign investments. So when foreign investors come in, they're having to pay a local tax, and they're not having to do that in any other market. And the third is around rupee depreciation. So when you sort of invest in India, the rupee depreciates over a number of years and has done continually compared to dollar, pound, euro, etc. And so they're thinking, okay, I mean, do you think those structural issues are a problem, and do you think India should rein back on some of those? And it's open to panel, but that's...
So I think...
So, hi, can you hear me? Yeah. So first of all, I think I was just seeing my phone because I got a message from my nanny's son talking about it. Hey, I had invested so much capital, right? And then just when you're saying that when taxi drivers are telling you which stock to invest in, that's the best time to exit. So I think India retail investors is now becoming a larger pool, right? And we have a portfolio company that is called Dhan in the investment brokerage business. It's a competitor of Zerodha or Grow. And when we are looking at some numbers around, how many accounts are opening every month, not going to talk about exact numbers, but of course, when the stock market is rallying up, you have a lot more growth. But that growth hasn't slowed down, right? It's not gone into negative yet, that, people are not getting onboarded. So there are retail investors today, fresh retail investors who are still opening accounts with brokerages. And maybe the data gets posted for this particular quarter a little while later, but that's still heartening to see that there are people who are believers in the Indian ecosystem from a stock market standpoint, while there is massive correction that happens every now and then in cycles up and down. But having that faith, having that ability to understand it a little bit better, not just going on hearsay. So you'll have smart investors, you'll have people who will depend on, as I mentioned earlier as well, financial advisors, etc. So I think that's important for India as such. While, as my co-panelists have mentioned, we have been under pressure because of certain drop in consumption, our ability to, not being justifying valuations, which I see a lot in the private markets, that companies are overvalued than what they're performing. But I think from here on, folks will be able to figure out what is the best time to sort of go in. What is the best time to exit markets as well. So it's not only about investing, it's also about profit booking and also loss booking, right? Many people don't even talk about loss booking. And if you speak to like real experts in the field, they'll actually talk about how do you book your losses at the right time, which is, a strategy that not every retail investor understands of sorts.
That's like some fantastic advice there, some obviously experienced investors. I'm just going to bridge it somewhat now to sort of the tariffs. And again, I was looking at the numbers and the trade deficits. Trump is going to go after those countries which have a very large trade deficit. The largest trade deficit that US has is with China. It's 300 billion. And that's why his eyes are really set on China. Canada and Mexico are right up there as well. Hence, you can see those 2-3 in the news. UK's trade deficit is zero, pretty much. So, UK have quite a nice, fine balancing line, not to annoy Trump, because, you've got to be nice to him. But at the same time, they're kind of a little bit sheltered in that they, have a very balanced trade situation with the US. India has a trade deficit of around 50 billion. So it's quite significant, but not as significant as China. So I think it's on his mind, but it's not maybe going to go completely after India. And I think, Anar, when we were discussing this morning, the Capitol Hill, when Trump did his speech yesterday, 100 minutes, unscripted, by the way, for a 79-year-old person, which was quite amazing at the end of the day. But, he actually cited India in one of his points around there's a car tariff, there's 100% India car tariff, he's not happy with that. So I think he's definitely going to do something and come after India. But my personal opinion is not, India is actually in a quite sheltered place. So, Anna, what's your opinion on that?
Yeah, so this is Trump's second term, right?
Yeah.
So even in the first term, he had brought in some changes on the tariff rates. And this second term, his agenda was also the same. So when he was elected, he has started rolling it out, right? And so when he was elected, the markets fell. There is a trade deficit from the US side, though most of it is contributed by China, Mexico, and Canada. That is the reason why he has started off with tariffs on these three countries immediately. And I guess India is next in the line. They have announced a few things with reference to India. Just a few papers have been issued. But I think the most we would know in the second week of April when they're going to roll out for India. As a precaution basis, the government has already started working on it, pulled down some tariff on the whiskey, the bourbon, as well as the bikes and the cars. Secondly, on the domestic front, they have reduced the repo rate.
Just the mic, maybe.
Yeah, sorry. So, and trying to push the domestic investors more into the market to sustain the GDP growth. Yeah, so
But
government
I
is
mean,
being
Trump
active.
needs India. He needs us because if he's going to go after China, who else is going to provide them with everything they need, services,
And
goods,
India
and everything else?
would be benefiting from China, Mexico, and Canada reductions in the trade.
Okay, thank you for that,
Thanks.
Mike.
Yeah.
Kavita?
So tariffs and sustainability, that's an interesting one. And it's great that I think Anar brought the first round of Trump tariff reduction back in 2019. And I think what happened back then to sustainability, which is what FICCI, which is an Indian Industry Association, what they surveyed is that after the 2019 tariff cuts, what happened is that 47% of Indian businesses that were involved in exports actually reduced their ESG budgets because they had to make up for the tariff costs somewhere. And I think we're going to probably see a repetition of that, which is because you're going to see an increase in cost somewhere else. Unfortunately, you will have to cut down your budget on sustainability. So everything that we're seeing in terms of textile, auto, chemicals, you will actually see that they'll have to cut down their budgets at a company level because they'll have to make up for that additional cost. I think what is
That's
another
a really interesting point, actually. That is, yeah.
which is sad in its own way.
Yes, yeah.
But I think the other flip side of it is, while we're talking about US, what we also need to understand is that we're also a country that exports to Europe, we are a country that exports to ASEAN. And what's happening there is that your green tariffs per se, things like CBAM, which is the Carbon Border Adjustment Mechanism tax on chemical sector, steel sector, what's happening there is that they actually do want greener products, which is putting a tax on us if our products are not green. So what's going to happen with India and its manufacturing base is that people will have to tread a fine line. So export houses would have to tread a fine line between what they give to the US market versus what they give to the Europe market because the views on green and tariffs are completely contrarian. And we're seeing that with Europe and US also diverging on many aspects from foreign policy now to even green sustainability. So I think the key here is that we will probably lose out on ESG budgets for companies, and at the same time, Indian businesses will have to adapt to contrarian demands from different set of customers in different continents.
That's interesting. You jumped to the sustainability part, which is fantastic, and I think that this is going to have a huge impact on sustainability projects globally for all the reasons that you mentioned. And and Trump is basically going after economics. He only cares about bringing money. He's got America First policy. He came in on that agenda. America first and the global world climate and everything third. And I think that's, this is going to be a massive talking point and issue.
I'm sure the ESG and the sustainability is definitely not on his agenda.
It's definitely on the way down. His fracking is up there and, everything else is
He's
down.
just wanting to pull in money for US, which is
Yeah.
the right thing to do as a leader. Then we don't know how the benefits are going to flow.
Yeah.
Because it's going to take time for even the American workers, manufacturers, everyone to settle down and start giving results. Hopefully that happens soon. Till then, it's going to be a burden on the average American staying there.
Yeah, he's doing, in a way, he's thinking he's doing the dirty work that all the other predecessors didn't do. And he needs to make America
Absolutely.
strong again.
Yes.
And then I think that maybe the next government will probably rebalance. But
I think in my views, his policies are misdirected because even by increasing the tariffs on imports, I don't know how it is going to help the American economy because costs will go up, inflation will go up, and accordingly the economy will suffer. So I think it's a temporary phenomena. He is more like a negotiator, more like businessman. Even now we are hearing that he is going to postpone the tariff raise. He is announcing some dates. In India, he is still not announced. So I think he is more on threat side. He wants to, I think, try to...
it's a really good point, actually.
Tie up some deals. So that is, I think, his main motive because ultimately his economics, his advisor will also advise him how it is going to impact the US economy.
So what Amish is saying is basically it's all bluster. When you increase tariffs, it's a tax on goods coming into the US. Therefore, that's quite inflationary. If inflation's high, we all know you have to increase interest rates, and then that obviously can maybe send you into a recession. So Amish is saying, actually, everyone knows, all the best economists in the world knows if you put tariffs up and prices go up, and you have to pay more for stuff, then that's bad for the economy. So Amish is saying it's just bluster. He's just saying that. He loves to put stuff into the mix, and then he'll even deny he said stuff. But that's just part of his negotiating with the world and trying to get stuff done. I imagine he's got all the best economists advising him around him. Not imagine, he has. And he's got obviously some amazing entrepreneurs. You know, we may or may not like Elon Musk for what he's like as a human being or other, but he's an amazing entrepreneur, no one can deny that. He's got all of Wall Street behind him, and he's got all of the tech companies and all the CEOs of Facebook and everything else. So he's getting good advice. So he cannot be, and he's not a dumb guy, we know that, I think. You know, he may be not a person that people like or don't like, but no one can accuse him of being dumb. So let's presume he knows what he's doing, and he knows these policies are inflationary. Well, Mish saying he knows this. He's just telling people, I'm going to do tariff here, tariff there, because then he can negotiate and hopefully do something good for his country. I think that's basically what he's saying.
I think another point is about China. How does India is placed vis-a-vis China? But that is still debatable, it's still not clear. I think it is quite uncertain whether he is going to increase the tariff on even China goods. Because China also has a huge weight. Even though he wants to balance China, he is trying to create friendship with Russia. Maybe he wants to control China, but still it's very uncertain.
No one knows, right? So
yeah, he is also giving very confusing signal vis-a-vis China also.
Yeah, we'll come on to the geopolitical in the next bit, actually. This is the last 5.
Yeah. In terms of tariff-wise also, but I think for Indian economy it's good. If say India has to reduce tariffs, so naturally it's good for Indian economy, I believe. Even though it may not be good for certain industries like auto, because right now we are charging very high tariff, 100% on some say imported vehicles. But because of Elon Musk and all that, I think, so Indian consumer will ultimately benefit. Maybe Indian economy may also get benefit indirectly. Right now we are more into protection mode, but in the long run, I think it should be good for the country.
So Kamal, So, what do you feel in terms of the private sector and the impact of tariffs may have on the companies that you support?
So it's every challenge, poses an opportunity as well, right? And we've seen that in some of our portfolio companies. And just to, add some more perspective to, why Trump is doing this. He's not the only one who's doing this. India has also done this in some shape and form. There's something called the BIS that has been, imposed on certain goods. So for example, it's going to be hard for like shoe companies to import shoes into India. So everybody from a Nike to a Puma, etc., who doesn't have a manufacturing in India is worried, right? That's going to happen in the steel segment also, especially on the consumer steel. So everybody in their own sense is trying to protect their own domestic interest and promote sort of what's happening, within their geography. But just to give you an idea about how a startup's planning to do it, a lot of startups are generally, that we support are generally in tech. But even in tech, there are certain hardware startups. I'll give you a case study of this company called Ultrahuman. So Ultrahuman is this platform that is promoting fitness. You can measure all your, biomarkers as well as your day-to-day, levels. They make this ring, which is like a fitness ring. So far, they were manufacturing this ring just in Bangalore. But they sort of sense some sort of tension coming from the US policy side of things. They were a little bit ahead of the curve. And, you'll be really, really proud to know that Ultrahumans also set up a factory in Dallas in the US as well. So if companies are going to find US market as their major consumers, which is what has happened in Ultrahuman's case as well, 90% of the revenue comes from non-India markets. They've gone and set up factories outside as well. So having that presence there helps them in a little bit of a diplomacy stance also towards the ecosystem, helps them pitch to their consumers that, hey, this is manufactured in the US. While I was myself very proud to say that Ultrahuman ring is not manufactured in China like some of the other wearables. It was manufactured in Bangalore. But also now when it goes to the US market, it has a significant marketing advantage as well. There would be some impact on cost, but it's still a lot more easier to squeeze in some margins in tech products that have a little bit of a higher perception of value than coming down to like commodities and
so
maybe even.
Are your portfolio company thinking about having some kind of presence in the US now as well? Then, so when see what Umesh is saying is that his tech portfolio, that everyone in biotech and tech, their big market is the US. It's your first market you need. If you're developing a product globally, the first market you look at is how can I get into the US market? Donald Trump knows that, and that everybody's like obviously wants to enter that market. It's the most affluent market in the world. And if you haven't got a product for the US, you're always thinking, is it investable? So what he's saying is that to get around the tariffs, they'll set up some kind of operation in the US, somewhere in the US. It could be any state really, and to sort of then circumvent some of the tariffs, and you're seeing your portfolio actively doing that. So
Also to like add one more example, right? Whenever this sort of happens, I think the biggest victim there is China. And there are very beautiful spillover effects that happen to companies in India. So in the last 1.5 years, even before all of this happened, right, even before Trump was president, there have been massive China plus one effects that have benefited Indian startups who are manufacturing from India for the world. And it doesn't only mean that you're manufacturing it for the US, right? The EU market, the Southeast Asia market, the MENA market itself is so large, especially when you're manufacturing small things which are, let's say, pebble crushers or conveyor belts, etc. Whereas most startups that are enabling Indian manufacturers to figure out what is the gold standard to export are really, really benefiting out of it, right? So initially, most of these manufacturers were selling to customers in India. Because of this China plus one happening in the last 1.5 years, they are now going and selling this to the EU markets and beyond the US as well.
Yeah, I mean, it's going to force people to look outside of the US. So Anar, you have, Anar is not only, she's obviously runs her family office, and she has experience in the construction and engineering industries, but also she's just taken on a hospital in Ahmedabad, and it's a charitable hospital, and she's just getting that going. But she's also the senior person in Thai, which helps and funds startup entrepreneurs and mentors and hopefully gets them going. So maybe you've got quite an interesting perspective on that.
Yeah, so as a business owner, any business owner has only one thing on mind, like how to increase my margins, right? So way back, if you look at a broader picture, maybe 40, 50 years back, because of this sole reason, all the manufacturing went to China. Right, the economies of large-scale production and services and everything. So that is when the capital outflow started, and China built up its entire surplus based on only this one reason. Like everything started happening in China, Vietnam, everything. And then suddenly US, which is one of the biggest trading partners of China and vice versa, they have started feeling the pinch in their surplus, right? So now it is all coming back, like going from globalization to nationalism again. So that is why everything now, the circle has reversed. Like it's coming
India
back
first.
again to.
Should we look at UK first, India
2.0.
first? Sorry.
Yeah, it's all coming back again to 0.0, and nationalism, how to start saving your own public. There's a lot of unemployment in US. The people are getting jobs back. Like one of the reasons why this ring started getting manufactured in US, right? The main reason is you're going to have a surplus there. You have market there, and you have bigger margins. So as an individual entrepreneur, everybody's going to think in this way.
Yeah, so it's going to force people to think more insular rather than more global. The last 50 years, we're thinking of how to become more global. Yeah. Now, but India could benefit from it.
Absolutely.
We have the biggest market ultimately. China, India, US. We're up there. So
the labor costs in China is so low, as it's something like I think $3-4 per hour or something, per day. Sorry. And,
per day. Wow.
And US pays 24, I think, right? So obviously everybody will go to China for the production.
Yeah.
But now we'll start reversing. But I think time will tell. A year hence, when we are sitting here again, we'll have a better picture.
Yeah, but India is up there. Obviously, we have a massive consumer base. UK has just 50 million people. We're in the difficult situation on that front. But we have friends with, we've kept a middle balance, friends with Europe, friends with the US, etc. India probably is a little bit more protected and can be more insular and probably will benefit massively from some of these policies. So moving on to a little bit around sustainability and a little bit more on that question. So look, Trump's policies are probably going to be good for the US. I can't imagine there'll be anything but good for the US because that's obviously his agenda. And let's presume he's got clever people advising him. But it looks like he doesn't give two hoots about, he doesn't believe that global warming is happening, for example. Sustainability is like, that's all sort of put to one side. So you must be like turning in your, what the hell is, you must be looking at the news in the morning going, oh my God, this is really bad.
Trump and sustainability in one sentence is always a riot. I think taking on from what Anar mentioned about globalization versus national priorities, I think what happens in this scenario where everybody is looking after themselves and their national interests, the question is, what do you do to address global challenges? Because if you look at something like climate, what we do here affects the ozone layer on top of Canada, right? And what happens in some other part of the world affects us. So when you stop cooperating on global issues and only look after national interests, what happens to global challenges? And I think that's what probably we should be worried about. I think people were worried about this probably 30 years ago as well when they signed the Montreal Protocol, which was a treaty looking at reducing consumption of DDT. Because DDT being used in developing countries in Africa was actually burning a hole in the ozone layer over Canada. And that's where everybody signed the protocol. And of course, countries like India were exempt from it because we had our own malaria issues and things like that. But the fact is, you do need international cooperation to address global challenges. Now, what's happening in the Trump era, I think, and to a large extent, while of course he's only perhaps looking at the economic side of it, which is great, as I mentioned earlier, because that does push us to real life solutions compared to, let's say, virtue signaling. But the challenge is, let's say we make a green product which is good for the UK or the Europe market, and we could probably sell the same product in the US, and they're not going to stop us from selling it. The issue is, are they going to be paying for it, which is no. So the green premium that most of people in finance have been talking about is eroding. So you're not getting a green premium for making a greener product. And the issue is that also mentioned earlier, which is who's going to pay for the innovation. You're not going to have real life solutions to global problems unless you invest in innovation. Thank you. So we are not going to be finding real life solutions to climate issues without spending on innovation, and who wants to pay for it? And that's the challenge, that nobody wants to pay for it. So I think we're in a difficult spot here where we do want real life solutions without paying for it, which generally doesn't happen in life, like you can't get things without paying for it. So I think that's where we are on Trump and sustainability, which is not a great spot to be in.
I just wondered, for the younger generation, really, you're the younger generation here. So the younger generation, would they pay the let's say the green tax for products? Because ultimately, if consumers pay, that, before they were getting a discount for green, like in the UK, if you get solar panels, you get cheaper electricity and whatnot. Do you think that there's enough awareness in the consumer younger population that people will not mind paying that green tax moving forward?
I think from my perspective, if we look at how we promoted green energy in India was through subsidies. Indian government gave subsidies for people who adapted to green energy, like installing solar powers over the industrial roofs and the residential roofs. Precisely, government had to give some subsidies to actually promote sustainability, green things. So I don't think that Indian audience or Indian consumers are still very much aware about how green energy and green future is going to impact their lives and how it's going to impact their generations. And I think it will need a lot more work on the ground level to actually make that awareness happen. And if that happens, I think the generation has changed really dynamically. They have become more responsible and responsible, but also to be, honestly accepting the fact that our generation has been less simpler, more complex than our forefathers because of our lifestyles and stuff. I think they won't be able to pay the green tax yet with a premium. So that might be a problem for us to actually adapt to green things responsibly. But I think that's like a 50-50. If you think from the responsibility perspective, we have to for generations forward. Yeah. Thank you.
Thanks, Riddhi. Is there any questions If you hand up, if not, very quickly, I'm going to go for the last point in my agenda. But I'm going to ask a question and then wrap up at the same time because I'm out of time. I didn't even get to my fourth interesting point was geopolitics. Look, we know what's going on in the world. Everyone's rearming now. China's rearming, Europe's rearming, UK have increased their spending. I'm not sure what the Indian government will do. I can't imagine they'll be, if China rearming, I'm sure India will need to rearm as well to make sure that they're protected. God knows, Ukraine is going to get split up for its minerals and resources. It's going to be a bit here, a bit there. Taiwan, you never know if China rearming, Taiwan all these things is going to be a lot of shift in politics. A lot of money that could have been spent on innovation is going to be spent on defense, and that's obviously going to have an impact. So maybe if you have a comment on that and your sort of closing remarks. So we'll start with you.
Probably not picked the right spot to sit today.
Sorry about that.
No, in terms of geopolitics, I think we are going through probably the greatest, I would say, significant moment since probably World War II and Bretton Woods, which is the changing world order. And I think if I probably look at sustainability as well, which is probably following this wave of a changing world order. And I think I'll probably go back to the first comment that I made, is that it's probably pushing us in the direction to really look for solutions in the real world, beyond talking, beyond speaking, and I think beyond virtue signaling, which is very important. Do we have an answer to that at the moment in terms of how would we do it without the kind of economic support that we need in this Trump era, and the fact that a lot of our economic resources across Europe are actually being dedicated to geopolitical issues, wars, funding aid. How are we going to do that? How are we going to achieve that? I think probably I don't have an answer to that yet, and I probably don't think most of us have yet. So that's where I am.
Thank you, Kavita. Anar?
Yeah, I think everybody needs to take a break on the geopolitical scene. There's Ukraine, there's Israel and Palestine, and we have very strong leaders right now in US, China, Russia. We can't mention North Korea at all. And of course, India also. We're glad to have Mr. Modi on the scene. So yeah, everybody needs to take a stop, take a pause, and let things relax. Yeah, we need a breather.
We definitely need a breather. We could end up in World War III the way we're going.
Yeah, it's crazy. So I think we need to stop somewhere. There's no other solution except talking. War is definitely not a solution because it's a disruptor to everybody at any stage. Even the smallest man and even the highest man at any position would be affected. Yeah, so thank you very much. Thanks for having me.
Thank you, Anna.
So pretty much in line with what the panel's talking about. One, I think in a fully globalized sort of a time that we live in, the trade wars that we're talking about are just a little bit of a flex of a muscle and ego, if I have to talk about it. It's going to be hard.
They're all men. It's just testosterone gone crazy. Everyone's got it's getting in there.
It's going to be hard to do this from a long-term perspective. But at the same time, wars are not the solution. There have been wars that have been going on for years now, which is really sad. Talking about what should India do, I think India always has had a diplomacy-first approach. So I'm sure they're figuring out how to make this a little bit easy at a policy level for the Indian businesses, Indian consumers, as well as Indian businesses that are going to sort of export significantly to the US and other parts of the world. At the same time, a lot of Indian businesses also depend on China import. So there's a very, very different sort of a diplomatic conversation that needs to happen on multi-folds. But yeah, as you said, right, you have to not get driven by what is the hottest news or what's happening, but just take a step back, look at the situation. Even if it is affecting your business, think about innovative ways, innovative markets to also be at, and sort of have that at the back of your head as a de-risking strategy all the time.
Thank you. Kamal?
I think regarding your point about the defense spending, I think we have been living with the bogey of World War III for last, I think, couple of years, since 22, when Russia, I think, invaded Ukraine. So those things are going on. I think with the Trump coming in the picture, he may be less willing to put his money on the other regions. Like Biden, he I think got involved in the Israel and Hamas, then he got involved, he supported Ukraine. So that way I think that at time America, he put many lot of in these wars. But with Trump coming to the picture, I think his focus will be more on domestically making America strong.
Yeah.
So maybe he may not fuel
He's a
that
pucker
much
businessman,
of,
basically.
even though he is not willing to put money to NATO also. So European maybe have to increase the defense spending. India, I don't know how India as such has been spending quite heavy. China is spending heavily. So all these things are, I think, are regular features. So everybody has to defend themselves, whether it is Japan, couple of years back, even Japan was not spending anything. Now they have also increased their spending. As you mentioned, Taiwan is also under threat from China. So I think those geopolitical threats remains. So this is not going to be lasting peace. So we'll be always be sort of in the uncertain world. So that uncertainty is going to continue, especially with the Trump. I don't know how he's going to behave. But I think some equilibrium will be reached sooner or later. So it's not that every time everybody wants to be on war. I think once the Ukraine issue settled, then maybe Middle East, maybe another. But I don't think there is any going to be in war with the China. China is such a player in terms of economy that nobody can afford to, I think, take on China.
Yeah.
That's my view. So overall, I think some equilibrium may be there in 6 months to 1 year down the line, and things may come to normal. I don't foresee anything, any foolish thing like nuclear attack by any Russia or any other country. So maybe 6 months to 1 year down the line, it should back to the normal.
That's very reassuring. Thank you. Siddhi?
Geopolitical, for me, it's from my naive perspective, I would say that if you look at the full cycle and connect the dots, Donald Trump getting re-elected in US, China being withdrawn like from the US, India promoting Make in India, it's a huge potential for young entrepreneurs to scale there. There's a value inflection point for India that we should actually take opportunity of and just move really, really aggressively towards what we are doing. We are going in the right direction is how we have maintained our relationship with Russia. While Russia and Ukraine were in tensions, we had maintained our relationship with Ukraine. So India knows how to balance itself. That's what I think. The Indian government knows how to represent itself, someone who can be not egoistic and be a peacemaker and at the pace of growth. And I think if, for me to pass on the message, to conclude this conversation, the food for thought for me would be, will we go into World War III because of trade wars, political wars, religion and stuff? Or will we focus on growth and the globalization timeline that we are living in and take full opportunity to get into 2.0 world and make a better place for next generations? Thank you.
Thanks, Sri. That's a great point. Look, it's a huge opportunity for India, and I think Modi's, balanced a very fine line of being sort of not taking any sides, very neutral, abstaining. At the time, we thought it was, what is he doing? But now we're on the other side of it. We can see actually, India will be friends with hopefully everybody is the plan. Anyway, so on that note, I would love to thank my panelists. Can you, in the usual way, a round of applause.
Thank you so much.